Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the desktop, having a look at a few charts and trying to answer that question, are we in a bear market? Should we be worried? Should we be concerned? Or is this an opportunity to be taking advantage of? As we get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you'll be kept up to date with all the videos that we do here at Cheeky Crypto. With all that being said, done and out of the way, let's jump on down into the desktop and take a look at what is going on. And guys, I'm pleased to say that this video has been sponsored by Crypto.com. Crypto.com is the world's fastest growing crypto app. With over 10 million users around the world, you could buy and sell over 250 different cryptocurrencies at the true cost. As some of you may or may not be aware, you can actually see fluctuations in the price of cryptocurrencies. Sometimes some exchanges actually put their fees directly into the cost of the asset that you're looking to acquire. At Crypto.com, you can be rest assured that you are paying the true cost with the fees calculated separately. With that being said, they also do some fantastic things around NFTs. They've got an NFT marketplace, and of course they do have the Crypto.com prepaid debit card, and this particular card is something that I do want to spend a little bit of time just talking about. We use it on the channel all the time for the everyday kind of purchases, whether we are buying new tech for recording, such as the camera that I'm recording on here, or the computer for editing behind me, all the way through to buying a car. Chris bought his Range Rover Sport using 2 of these cards, and I'll go into why we use 2 in a moment. But basically, you're able to earn a nice cashback. We actually got 3% cashback on pretty much everything that we do here at Cheeky Crypto, including buying cars. And as a result, that actually kind of amounts up after a period of time. Now, there are several different kind of cards that are available, and I want to talk about these in a little bit more detail, right? So, as I said, we get 3%, and this cashback is paid to you in the CRO token, which is an appreciating asset as well. So, again, what is 3% today might become, 10%, 20% in the future. So, again, it's a fantastic way to look after the portfolio in the same way that the portfolio looks after you. There are, of course, several different cards. We have the Midnight Blue, which is your entry level. This gives you 1% cashback, and there are no requirements for this one. You don't have to stake any 𝗕𝗘 tokens or anything like that. You can just go up, sign up for Crypto.com using the link in the description, and get this card. Right? No worries, no have to stake anything, and you'll earn 1% cashback, which is fantastic. Obviously, the Ruby Steel is the first kind of level up from there. This is a $400 requirement to stake. You obviously get staking rewards as well, so you'll still earn passively on those 𝗕𝗘 tokens. But by staking them, you are eligible for that next level card. This earns you 2% cashback, and it also gives you 100% rebate on your Spotify subscription. So if you use Spotify, and just by getting this card here and you pay for it via this card, you'll get 100% of the money back for your Spotify subscription paid in the CRO token, and again, an appreciating asset. So it's a fantastic way to make things work a little bit harder for you. Obviously, as we talk about 3% on this channel, this is the one where we have the Royal Indigo and Jade Green cards. These give us 3% cash back. It requires $4,000 worth of staked 𝗕𝗘. And again, we get all of those staking rewards as well. We get Netflix and Spotify. We get access to airport lounges as well, and we get a withdrawal limit of $800 from ATMs, right? So again, pretty good stuff. We move up, Frosted Gold and Icy White. This is $40,000 staked, and again, you earn 5% cashback. This time you get Amazon Prime as well as Netflix and Spotify, and 10% of Expedia rebated in CRO tokens. Again, appreciating asset. You get one plus guest to your airport lounges as well. You get Crypto.com private, which is fantastic. Look into that if that's something you want to be looking into. And you can earn extra bonus rewards. You get exclusive merchandise, welcome pack, and you're able to basically withdraw $1,000 a month, from the ATM. Above and beyond that, you get the Obsidian. This requires $400,000 worth of staked CRO tokens. Again, appreciating asset. You'll earn all the staking rewards on that. You'll also get 8% cashback paid in CRO. You get pretty much everything on this list, right? We get the Spotify, Netflix, Prime, Expedia, Airbnb, you get 10%. You got the airport lounge plus 1 guest, Crypto.com private, the earn bonus rewards, the merchandising pack, but then you also get private jet partnership as well. $1,000 ATM per month as well. So fantastic opportunities to kind of get in. There's a link in the description down below, guys. So why not check out Crypto.com today? Right, let's get into the main event, guys. We're going to be dissecting Bitcoin a little bit here. Let's talk about bull runs. Let's talk about bear markets, and let's see what's going on, right? So what I really wanted to kind of highlight here was the level of pullbacks that you generally see in both, bear markets and in bull runs. What is expected and what is unexpected? What would make us nervous? What wouldn't make us nervous? All of that kind of good stuff, right? So this is an important chart. We use this one a lot. This is one that we were using for the Gaussian channel. All of that kind of stuff going on there. Yet to kind of put a pin in that one, but it is what it is. And what we're going to do is we're going to basically take a look at the 2013-14 bull run. We had to look at the 2017 bull run, the lead up to it, what happened afterwards, and obviously where we are today. Okay, so we're going to start things off just down here. There's a couple of interesting things I do want to kind of point out that you might not be aware of, but hopefully you are, and if not, this will help. So we basically in 2013 bull run had what they call a double peak, right? And what we had was a first peak and then basically a massive pullback, people thinking we were going into a bear market after that. And, actually what happened was we had a good push to the upside and we set another all-time high. Okay, and there's actually several all-time highs on that journey to that peak at the top. Now, this is an interesting point because, by all classifications, an 82% drop in value, you could argue that is a bear market, right? So you can see why people were thinking that was it, we're done. But the other really important thing that we have to understand here is that this is super early in Bitcoin. It was super volatile. And basically, from those two peaks, we had 231 days. That would have been an incredibly short bear market, right? And it's actually even shorter than that because the low point was actually in the very same week that we had the peak, right? It was up there really high back then, $260, right? And then it pulls all the way down, wicks down to $45 in the same week. Okay, that was an 82% value drop in 1 week. That was very, very shock to the system, huge shock to the system. People were calling it a bear market. They honestly recovered up with a bounce. You always bounce, right? We often talk about this. You can use the Fibonacci retracement tool to get that information for us. We bounced up to the 618, got rejected, and were pushed back down. Now, the interesting part about this is obviously we didn't come back down to those lower ranges. We continued to set these higher highs, but we did actually pull back quite significantly, right? We can acknowledge that even after the bounce, it was a 75% pullback, which is quite significant. Now, obviously on that journey to the upside, we want to kind of acknowledge, let me just park this over here actually for 1 second. So we just line this back up and we'll just put it over to this side. So therefore we can actually take a look at these. So on the side of after that pullback, we saw a bounce, and then from that bounce, we saw an additional pullback of 62%. Okay, then we bounced back up again, and then we saw another pullback here, and again, this was 36%. My point that I'm trying to make here is, although there was a lot of volatility here, even after we had peaked and had lost 82% of the value, we pushed up, we pulled back another 62%, we pushed up, we pulled back, to 36%. Now, what you can acknowledge here is that this was descending and this was ascending. Okay, so basically you're getting yourself into a triangle, right? And we broke out from that triangle. And again, we're leading in with a downward direction into the triangle. So triangle starting with the downward motion. Okay, and then obviously you can plot that out however you kind of want. Now, it's not an Elliott wave triangle on the weekly, but maybe it is on the daily. Maybe there's something there. But nonetheless, we have that triangle kind of formed out, and we can see that kind of break to the upside. But there was volatility, and we had volatility that was expected at a time. We broke from here, and then we pushed up quite nicely to the upside back then, right? So we can see and acknowledge that we pushed up 1,200% after a bear market was called. Okay, and obviously that happens rapidly, very, very quickly, very short space of time, and then we're straight up there, right? Not a bear market in the sense that a lot of people would be familiar with, but nonetheless, you could argue that there was a bear market, an incredibly short, compacted bear market. And this is important to understand because we're going to get into that stuff in a moment. Now, after that peak, what did we see? Well, we saw several additional pullbacks, right? We had a 67% pullback initially, and that then bounced to the upside. And then from the bounce, again, getting rejected from those key areas, guys, the Fibonacci key areas. If we actually go ahead and throw that on there, we'll just quickly check that. we went up to the 786, the 702, and basically got rejected from that area. Okay, so we know that the Fibonacci retracement is good to indicate where the bounces are. Really important. Then we basically pulled back 60% after that. Okay, so we bounced up. We lost, I think it was like 67%. We bounced from there. Again, we lost 60%. Then we continued to bounce around a little bit, right? And this is effectively the bear market. This is the longer period of time in the bear market, and there are these really large pullbacks like 67, 69, 60, 52, and then there's another big one just over here after we kind of peaked nice and high. We pulled back an additional 59%, and then obviously that next move over here after the bounce, we pulled back another 66%. So we're dropping pretty decent percentages. Overall, it was an 86% pullback, right, from the peak through to the low of the bear market low. That was a 413-day period, right? So straight away, we have two kind of things to notice. We had a really short period here, that period that was effectively, let me actually grab hold of my date range for a sec. We'll just pop that on here. From peak to peak was a 231 day. If we actually just run that across here, we could see that actually there was a low point for 84 days. Another, since our last kind of major kind of pullback of 36% was 175 days. So we can see that there's volatility in there, and it doesn't last very long. But ultimately, if we were called out a bear market, we would have probably called it the shortest bear market that we've been aware of here in crypto. That was, 84 days. You could even argue that the lowest point was actually within 7 days of the high. Okay, so we know it was volatile, not a lot of money back then, and we can kind of explain it to a point. Now, as we come across, obviously we go into that, after that peak, we go into a bear market that lasted 413 days, and since that low point, we start to see us rising to the upside, right? The 2017 bull run. But what do we have on that journey? Well, we have a push up, we pull back by 37%. We push up, we pull back by 42%. We push up, we pull back by 40%. We push up, we pull back by 35. We push up again, we pull back by 34. We push up, we pull back by 40. We push up, we pull back by 39%. And again, we then push right up there, and then we pull back by 69%. Okay, we bounce and we pull back another 44%. Total, by the time we actually find the bottom of this this bear market low, which was a 364-day run, effectively we dropped down 84%. Okay, so what am I telling you here? Well, what I'm saying here is it's pretty common in a bull run to be expecting 40% drops in Bitcoin. Okay, that is pretty much kind of where this averages out. A little bit lower than that, admittedly. It's somewhere between that 38 and 40% range, right? So we should be pretty comfortable with that kind of level of volatility, right? That's what we see within a bull cycle. We see pullbacks of 38 to 40% on average, and it's pretty much business as usual. Profits are taken, price pushes up afterwards, right? We don't call each one of these pullbacks a bear market. Okay, this is a bull run, and it's quite clear to see with the natural kind of growth and progression over time. But you do expect that volatility. This is an unregulated market, therefore it's going to see some bad actors manipulating the price as they can. And whales are going to be very good at this, going after the liquidity, and they'll be looking at where you have your stop losses, where you have your leveraged positions, and they'll be going after those pockets of liquidity. It means that they can acquire the asset without moving the needle, and they don't want to move that needle until the right time comes. They want to heavily accumulate, and then they want to dump. Okay, so when you see pullbacks like this is basically, in my mind, liquidity pockets at the high end and liquidity pockets at the low end, right? So you're basically taking out any long positions from the top, and you're taking out any short positions from the bottom, and basically you're transferring the value of Bitcoin from, let's say a retail investor into a whale or to an institution at the time, right? They act differently. They don't just buy up steadily, slowly over time. They look for the pockets of liquidity and they take advantage of it. Okay, which is why on this channel we would never suggest using leverage. We find it high risk. It's visible to everyone. We don't tend to use stop losses. We much prefer to have more manual control over things. We buy the asset, we store the asset, and we are in control of when we sell that asset. We're not going to get stomped out of the market. So here we can obviously see that we should be comfortable with that, right? We should be comfortable with volatility of up to 40% and still understand that it's not necessarily bearish, okay? There's bigger patterns at play that take precedent over everything. And when we're in a bear market, what do we see? Well, we see pullbacks over 50% initially. Okay, so when we actually take a look, and while you can argue that this initial volatility here, was a bear market and a very, very short one, is that we dropped down 82% in 1 week. Okay, and that is bearish. That is a bear signal. Likewise, when we actually had the peak up here, we were at 67%. Okay, so we should be, looking back and thinking, yeah, okay, if we're over 60% drop within the first kind of wave count down, then we should be thinking we're in a bear market. Okay, that's kind of the takeaway here. And obviously, as you pull back here, and this kind of fake out as well, and I call it a fake out, but in theory, it was actually a bear market in its kind of sense, is the pandemic when it started in 2020. Okay, or actually the latter part of 2019. But here you can see that pullback was 72%. Okay, so you can argue that, like you can with 2013. It is basically a very bearish signal, and we should acknowledge it as such, right? This was a fantastic opportunity to buy, and if you throw that Gaussian channel on, you can see why. The Gaussian channel didn't turn red in any sense of the word, and we were very much bullish actually earlier on in 2019. And you can also check Chainlink, which also started to go at the same time. Okay, so actually this is actually where the bull run should have started. We got pulled down because of the pandemic and everything that was going on in the world and black swan events, and then we got triggered back to the upside, and you can see that pretty much most of the alts started really pumping around March of 2020. Okay, so I'm going to turn that channel off. So we can acknowledge that that potentially is bearish, and we should acknowledge that that was bearish at the time. And then we start this bull run to the upside. And then what we're going to do is we're going to dissect this down a little bit. So although we started here and it didn't really take, we actually had that big pullback. What else has actually been going on? Well, we had this pullback here of 56%. Okay, and this is basically from April down into that low that we had in June. Now, as I said, it's not above 60% as per the other pullbacks that we've seen after a bull run has effectively been, is over, right? And a bear market it starts. So it's not quite in line, but it is very, very close. And you can see why people were thinking that we were going down to 20K, 10K, whatever at that time. It is very, very close to basically effectively saying it's a bear market, right? Very, very close. Now, when we actually take a look at this, and this is why I say it's really important that we stay focused in on the bigger picture, is that there are other patterns at play. And you know this when we take a look at this chart here, when we say, okay, well, if the pandemic was actually wave 2, this was wave 3, meaning that wave 4 is coming here. And again, if you actually follow Elliott wave theory, you know what's impulsive and what is not impulsive. Not only can you just tell by what looks impulsive, but there's also technical ways that you can measure this. If you go past that 1.382, right where you saw this volatility at the previous high, this would have been the turning point. This, in fact, should have been the turning point for a C wave, but instead we continued to get that growth. And as getting that growth meant that we went impulsive, meaning that this was a fourth wave correction and that we should see another all-time high, which we obviously have. So as I come back into this and we start talking about, well, why weren't we bearish in a 56% pullback? That's because the pattern on the larger time frames were dictating that actually we were going to be expecting another all-time high, of which we have seen. Now, this is where the problems start. Right now, we are still tracking a pullback. We haven't seen the bounce, at least not a proper bounce just yet. We can argue that we pulled back just up to this point here. This would have been effectively the end of November. That was a 39% pullback, nothing too strange. We pushed up, we got rejected, and we are potentially still pulling back. We were in pretty comfortable lands of about 40% though, 41%. So it's not unusual with everything else that we've seen in the past. Again, we can take a look at some of these other kind of pullbacks that we've experienced with Bitcoin. We can see another 24% in there. Here's quite an interesting one just over here. We pull this down, we have 32%. And again, this is a pretty common story. You find that basically what's being searched for here is just pockets of liquidity on this journey, but we have not seen anything to the same extent as what we had previously, right? So 2017 was a lot of very heavy corrections on that journey. This particular cycle it's actually been pretty tame, right? We've seen one big 56 and we've seen currently a 41, but otherwise there aren't lots of little kind of pockets of liquidity being picked up. Instead, I think other patterns are at play here. We definitely have some form of manipulation on some price charts. I think we do see, support being given to Bitcoin when support is needed, and we do see resistance being given where resistance is needed, i.e. the pockets of liquidity are being utilized within those areas. And I still feel that we are heavily oversold on this stochastic RSI. We are more than likely, in my opinion, to go into continual growth to the upside, where we are likely to, in my opinion, push up quite nicely to another all-time high for Bitcoin. The jury is really out as to whether or not we actually see $100,000 Bitcoin. And which is why you see on the thumbnails $100,000 possible question mark, pretty much for Bitcoin videos. And this is pretty much just driven from the fact that that is a major resistance blocker. It's a psychological barrier naturally, but it's also going to be an area that we are likely to find heavy resistance on, even though some of the technicals are indicating that we should be thinking more about $180,000 Bitcoin. There's high probability that actually that isn't likely to be the case. And we should be more comfortable in that range between 80 and 100. And there are things that we could look at in different videos to kind of really pinpoint some of those price points where we do think we are likely to find heavy resistance. But ultimately, that stochastic being where it is on this weekly chart is just where it was before we set another all-time high already. It was also down in this area the last time that we went up to 65k, the time before that, before we moved up into that $69,000 range. So being so heavily oversold on this weekly chart, knowing that Binance just bought 43,000 Bitcoin, over $2 billion worth of BTC, this is a very encouraging time. This is not a time to be bearish, but a time to hodl strong. Don't get shaken out. Don't use leverage. Obviously, not financial advice. I'm not a financial advisor, so I cannot give you that. But it is important that you kind of, really analyze it, really think about it, and think about, why MicroStrategy, why these billionaires, why Binance would be buying the dip if they didn't already know or believe that Bitcoin was going to go into a new all-time high. We have lots of indicators indicating it to us, yet still we find ourselves wanting to doubt it. We want to doubt the price appreciation possibility of Bitcoin, but I do think it is there. And I'm not heavily invested in BTC. I have a little bit of it, mainly just for the kids, for the future, etc. But it's not something that I actually actively go out and buy. It's a nice asset to have there. It's great to kind of tip your hat to them for everything that's been created and set off the world that is blockchain tech. But ultimately, I'm not bound by thinking I'm going to become a millionaire because I'm invested in Bitcoin and it has to go to these levels. That's not why I think it's going up there. I think it's going up there because the data is suggesting that it is likely to go up to those higher areas, and we are likely to see an all-time high pushing further forward. So on this weekly chart, it's very, very encouraging. We do expect volatility. The volatility hasn't really changed, but we are starting to see some changes in the data that sits on Glassnode. That's actually quite encouraging. It makes me feel that the manipulation might be starting to come to a bit of an end. Now people like Binance have bought up a very significant amount of Bitcoin, and we could potentially start to see things progress as it was supposed to and as it is intended to continue. Guys, I'm going to leave the video there, but hopefully you have found this useful and informative. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. There's a link to our Discord server down below, completely free. Why not check it out? We're down there quite a bit and posting various different articles, TA. You can obviously ask us various different questions down there as well. Links to Patreon if you're interested in a bit more in terms of strategy, bear market strategies, accumulations, etc. Why not check that out? Guys, with this said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.